Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about an out-of-the-money fly setup, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to join the world's #1 Zero DTE trade destination. Enjoy, guys.
All right, we have a 30 wide and we're going to put on a put fly. Those are the parameters. We know that when we put on an out-of-the-money fly, we're trying to make the debit about 10% of the width. So that means that when I put that put fly on, I want to make sure that the cost of that fly is going to be about $3 or less. All right. So it's going to be 30 wide and I'm going to pay $3 or less. Do I know the strike yet? No, I have no idea. It doesn't matter.
Oh.
It's whatever satisfies those conditions.
Yeah, that's a little clear. So how do you get there now?
All right, so I'm going to put on a put fly. So I go to my options chain for tomorrow, and there it is. I'm going to put a put fly out of the money, so I know it's going to be down here somewhere. I just pick any arbitrary place because I'm going to probably have to change the price anyways.
Yeah, just put an example.
So I'm gonna put on a fly for now and make it 30 wide and see what the price is. All right, so I'm going to go down to. So anyways. So there it is a 30 wide put fly, but it costs 480, 490. That's definitely not what I want to pay, right? I have to move it further out of the money to make it cheap enough for me to accept it. So I'm going to go
further means higher or lower?
Further away from the money, further away from where the market is. So the market's right here. That means that I need to move this whole fly. I'm sorry, let me get my.
That's the price what's selling right now, or
right now the market is priced right here. It's always right at the intersection of this dark and purple line.
Oh, okay. All
right, and I just placed this fly with the center strike at 5600 and then one of the strikes at 5630 right here, and then the other strike at 5570. So there's the fly right there. Now it's too expensive. So that means I have to move it this way.
Where is the expensive?
Right there. Debit. That's the cost of the fly. That's your risk right there.
When you do that, the numbers automatically get in there.
Yeah. So wherever you place it, it's going to tell you how much it costs. Because what it's doing is it's tallying up the cost of those three strikes. This one here, two of them here, and this one here. And it takes their prices and combines them all, and that's the cost of the trade.
So that's the VIX, the spread that you're talking about, the 20.
No, no.
The 30 to 25?
I use the VIX to determine how wide I'm going to make it, how much space I'm going to put between the strikes.
That's what that means.
Yeah. So the VIX tells me how wide to go. So then I come and I put the trade on and I say, okay, I got to make it 30 wide. And so this is how I do it. I put it up here and here's my trade, 30 wide. This is the center strike right there. And then this one is 30 points below it and this one's 30 points above it.
Okay, very clear.
But it's too expensive. So I have to push it further this way to make it cheaper.
The premium?
The debit right here. This debit right there. See, right now it's almost $5. I got to get it down to $3. I don't want to pay $5 for this. I want to pay $3 or less.
So that's not the premium.
No, this is the debit. It's what's
for the premium.
Forget premium. We're not dealing with premium here. We're dealing with premium after we're into the trade. That's what we're trying to collect. Right? This is what the cost of the trade is. This is how much risk that we're taking. The debit is your risk. All right. Now we can figure out the potential of this trade. It's 30 wide. The way you figure out the maximum potential of the trade is you take the width and you subtract the debit. So if it's 30 wide, right? And my debit is $5, then you subtract $5. So the potential is $25. And because the SPX has a 100 multiplier, that means that this trade has the potential of making $2,500. So if I put this trade on right now, that means I'm using $5 to make $25. That's not good enough for me. I want it to be $3 to make $27.
How do you do that?
Because 30 minus 3 is 27, right? That's what I want. I want that ratio. And the way I do that is I have to push it further out of the money. I have to push it all these strikes this way, right? So the way I'm going to do that is I'm going to subtract about 2 strikes from each one. So watch what happens when I do that. So I'm going to go down to here and I'm going to make them lower. So the 5570, I'm going to make that 5560 and I'm going to make the 5600 5590. And I'm going to make the 5630, 5620. So now they're all 2 strikes further out. Still cost $4.40. Still too expensive. Let's try it again. We'll go 2 more strikes. with each one. All right, now it's down to 380. Jeez, I got to push it way out. Let's try 2 more strikes. All right, now we're getting close. $3.35. Let's take a look at what it looks like. There's my strategy. Still pretty close to the money, but it's not bad. That's not a bad trade. That's within my range. It's a little expensive. I could push it out let's try another 5 points. See if it gets us down there. No, a little bit more. All right, that got us, look, 295. Yeah, that's good.
Ernie, but when the trade moves, like in this case, if it's a downward direction and it pulls up, the debit cost goes down. So can you walk yourself into a good debit, a reasonable debit when
so you're going to sit there and try to time it and say, okay, when it goes down there, then I'm going to take it.
No, I put the trade on and then I just watch the debit cost, and then when it's at a good price, then I take it.
Okay, so in other words, the price is going against you, but that's no different. It doesn't always do that, does it?
No, it does. No, it doesn't.
Yeah, it doesn't always do that, right?
No, it doesn't.
All right, so sometimes you get lucky and you get a better price before you execute the trade.
Okay.
Sometimes you don't. It's still the same, right? The other thing is that we're usually taking these trades based on a market event, right? We're waiting for a pull up into a structural level, and then that's when we execute the trade. And when we do it, we just want to make sure that the trade's going to cost us what we want to pay. So if that were what I'm going to trade right there, let's say I can get it at $3. That's an acceptable trade because that's the kind of risk to reward. Oh, now it's going down. 280 is even better. So now I want that trade to go my direction. We'll see if it does. It's nighttime, so I don't expect anything to happen. But if we were putting this trade on, I wouldn't just put it on. I would put it on based on what's happening in the market. And the reason for putting a trade on is looking at our market structure. So tomorrow, I'm going to put on where tomorrow is. It's going to be right, there's the morning, 9:30, and then let's copy this line. And then this is at, so that's what I'm targeting for tomorrow. So the market's going to find its way over, right? It's going to do this all night or whatever. And then it's going to end up here. And then at the open, I'm going to be waiting and maybe it comes up to here. And then I decide that's where I want to make the trade because maybe my divergence indicator is saying, yep, it's going to stop right there because it's finding support there. So when that happens, I go to my trade. I have it all set up. Right now, it's maybe a little expensive. So I push it out a little further. And when I'm happy with it, I take the trade. And then I place a trade down here, wherever those strikes go based on my width and my debit. So I'm waiting for that to happen. That event. The reason why we're waiting for that event is because that's typically where we're going to get our best opportunity for a move in our direction and the biggest move possible. And then hopefully it will continue down like that and I'll make lots of money.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.